We are welcome to our management accounting class. So it is principally very basic at this level. So I would just encourage all of you be quite confident. If you have any questions, you have my email address. So please just drop me an email. My name is Richard Kojotewia, so fellow with the ACCA. And so I have seen this to be quite practical, very easy, and straight to the point. Okay, so I'll share my screen and then we look at our first lesson. Just a second. Okay. Okay. So first, I want to take you through the features of our Exploring Management Accounting class. So I would advise that take some minutes break, 5 to 10 minutes break from reading. Always take the chance to engage in active discussions, participate, share ideas with your peers, practice some of the key techniques in answering this question. The key to getting a very good grade and also practicing this in real life is to attempt more questions, more case studies, and more quiz questions, okay? At the end of the day, we are looking at what have you learned, what are the applications of this particular model in real life. At the end of each lesson, you realize that there will be a session where we plug in 10 key concepts for each topic so that it helps you with understanding and appreciating the course. The EMA course is broadly a good coverage of accounting and finance functions. It will narrow down more on management accounting. It has a commercial focus, no two ways about that, and it helps in making decisions in real-time business settings. The module content is relevant to both accountants and non-accountants, and the key aspect of this module is to look at business managers, business decision makers, and other specialists who take informed decisions in the context of business operations. So we are going to look at key concepts, techniques, procedures of accounting and finance, which are more or less universal in application. Of course, we'll contextualize the lessons and give you some study opportunities. Please use the old model sites, attempt the quiz questions, and also any tutorial questions which we'll give to you. For this first week, we'll look at the introduction. Next week onwards, we'll consider the costing techniques, marginal costing and break-even analysis or cost volume profit analysis. And then we'll look at budgeting for the rest of the 6-week period. In the 7th week, no classes, is purely online assessment and revisions. So just let's brace up. Okay. The nature of the assessment will usually be online, open book, 25 MCQs, which usually come from a large test bank. So if you are able to practice more questions from the Moodle site, trust me, you are about 90% through with the final assessment. It is just one test, which is worth 100% of the model. You have a limited time, 1.5 hours to complete once you start. So take this into consideration. Question is, if I'm not an accountant, why is this course important to me? Accounting is the language of business. Once you engage in any business activity, you should know that accounting plays a key role in the subject matter. You don't need to be an accountant to practice accounting. Every now and then, we engage in accounting, but we do not know. You check your bank accounts every now and then. That's an accounting practice, okay? So the basics of accounting should be understood in these various dimensions that we communicate with people, especially managers and colleagues at work. We are understanding accounting reports which are given to us to interpret. We are able to draw up financial plans, both for our personal selves and for the business setting, okay? And also you should be able to prepare simple reports that will appraise performance at the workplace, and also trying to understand any financial consequences of any decisions the business takes. Every employer currently would expect that somebody who is hired into the workplace has some good basic understanding of what accounting is. And for you as accounting and finance students, it is quite core for you to understand these concepts. Okay. What is the role of accounting information? You know, accounting information gives us a lot of questions to find solutions to, all right? Questions like, what products and services should we as a business provide? What are the costs and prices of products and services which we should put out on the market? How many employees should we hire? And what will be the cost of hiring them? If we want to expand our businesses into new markets, how viable is it? What cost dimensions or cost implications does this business expansion have on our business, on the community, on any other stakeholder who holds a core influence over the organization? Finance options to purchase assets and to provide cash for day-to-day running. We need to make some decisions on that. We need to also put up some financial targets and also try to see if we can get some resources to run our businesses. We need to also measure success. Are we making profits? Are we making enough returns to sustain our business as a going concern? So these are all information that accounting will provide to us. And at the end of the day, what is our grounding in terms of our financial position of the business? How many assets are we owning? How many liabilities and debts are we owing? What is the capital invested? What are the returns on this capital we have that have been invested in this business? All right. Accounting, like I said, is the language of business, but it is traditionally split into two branches. We have the financial accounting bit and the management accounting bit. Once the financial report, or let me just say accounting, which we all know to be gathering of data, gathering of financial data, interpreting them, analyzing them, and communicating them to users. That's all about accounting. But then which users? When the users are outside the organization, like shareholders, investors, bankers, suppliers, government agencies, name them, then it deals with purely financial accounting. So the International Accounting Standards Board has clearly stated that objectives of financial statements, external financial statement, that financial accounting statement, is purely to help provide useful information to a wide range of users in making useful economic decisions. And most of this wide range of users of financial accounting are external users. For internal functions, or where accounting information is used within the organization for making decisions, such as putting up a budget, gathering cost information on a product or service, and to set selling prices, these then become management accounting. So financial accountants will prepare accounts for external users. Management accountants will prepare information for internal users. So you ask yourself, who provide information for auditors? Verily, it will be financial accountants. Who provide information for managers within? Management accountants do that. All right. So cost classifications is the next thing I want us to look at. Costs have several legs, okay? They lead to various dimensions. So there are costs which goes directly into the production process. And there are costs which are time-bound, or they are incurred within certain time limits. So those costs which goes into the production of goods and services, we normally classify them as production costs. But those ones which are time-specific, which are normally written off into the profit and loss, are the period costs. You usually find out that most period costs are indirect, and they are usually incurred by the head office. So talk of the wages, the rent, the utilities, audit fees, okay, all of these are period costs which are incurred within a particular time frame. For production costs, we can normally split them into direct and indirect costs, okay? We'll look at this concept in the next few slides. So production costs, like I said, when they contribute directly to a cost of producing goods or services, so materials, labor, factory overheads. Period cost, time bound or time restrictive, okay? Direct cost, which is a sub leg, or let me say a branch, a segment of production cost can be easily traced to the product. So talk of direct labor hours, direct material, direct overheads, okay, these are directly attributed to the cost. However, some production costs cannot be directly attributed to the product. And these indirect costs could be supervisors' wages, general factory maintenance, okay, factory floor, rent, stuff like that, okay. So let us pick these two questions. I gave you the hint earlier, but I will just give you another hint. So which one of the following statements is true regarding financial accountants, okay? The financial accountant prepares accounts for external parties. Remember, financial accounting is for external users, basically. The management accountant submits audited accounts to shareholders. Really, remember, management accounting is more for internal and not for external. So you realize that the B is clearly out. Management accountant prepares budget to aid internal decisions. Management accounting is within. So clearly it's giving us a clue there. The financial accountant has a mostly internal function within the business. No, financial accountants are usually external. Which of the following statements are true regarding types of costs? Direct costs are usually incurred at the head office. Remember, direct costs are attributed to the product. So this is clearly out of the scenario. Indirect costs can be incurred at the head office and in the factory. Take note of that because you can get supervisors and fees at the factory, which cannot directly be attributed to the product. We can also get head office expenses, utilities, rent, which cannot be directly attributed to the product. So take note of that, okay? Supervisors' costs at the factory are an example of an indirect cost. Clearly, I gave you the hint. Rent and rates incurred at the factory are an example of direct cost. You cannot directly read rent and rates into the cost of the product. So you see that two answers there are clearly correct and two are not correct. Cost should be classified per functions. If you look at the table provided over there, realize that usually most organizations will have classifications of functions in terms of production, administrative, selling and distribution. The question is, how do we know which unit incurred which cost? So examples are given. Production, make sure they are all related to the product, okay? So administration, usually overheads, indirect. Selling and distribution could also be usually overheads, okay? First step in costing is to allocate these costs to the functions, to the departments, and ask yourself, are they direct or they are indirect? Admin and selling, like I said, are usually indirect. Production costs could be both direct and indirect. Let's take a detailed scenario here. A limousine service. What are the cost classifications? The driver who directly drives the limousine is a direct labor cost. So we can attribute it directly to the service it's providing. Fuel cost goes into the limousine, a vehicle, a direct cost. We can usually trace it. Champagne, limousine, you have to sit in, feel free, be served. It's a direct cost. Car servicing and repairs. It is not direct. It doesn't go straight into the service function, okay? You service the car, you repair, make sure it's in good shape. Office rent and office staff cost, office utilities, these are all indirect costs which are related not to the service we are providing, but to the administration of the service we are providing. Let's take a more detailed example. Audit fee. This is purely an admin cost, and it is indirect to the product, okay? Packaging of the product is a production cost, and purely we can say it is direct. All right, factory security cost. Factory deals with production, but the security cost cannot be traced to the product. So though it's a production cost, it is indirect. Raw materials are productions cost, and they are directly attributed or traced to the product. What about sales salaries? It goes directly under selling, and realize that this is an indirect cost because you cannot trace it to the product. Storekeepers' wage The storekeeper has to do with production. What does he keep store? What does he keep watch over the production? So it is a production, but his wages cannot be traced to the product. So it becomes an indirect. Laborer. The laborer works directly on the production floor. His cost can be traced to the product. So it becomes a direct cost, okay? Office salary is administrative, indirect. Office rent and rate, administrative, indirect. Director's fee is also administrative, indirect, because we cannot trace all of these to the product or service we are providing. Machine depreciation. The machine is used usually at the production floor. So you can say that machine is a product cost, but can we trace the machine cost, the depreciation directly to the product? No. So it becomes an indirect. Factory heat and light. Factory heat and light deals with production cost, but can we trace the heat and light directly to the product? No. So it becomes an indirect cost. So this is what I just said with all the answers ticked out over there. All right. So the next thing we need to look at is, what are these costs? Costs behave in a certain way. Do they remain the same, or they change in line with activity level that goes on? When they change due to activity level, then how do we classify them? All right. So look at these graphs. Fixed costs, they remain fixed regardless of activity level. Variable costs, they will change once activity level rises. You can see from the graph here that when activity level was increasing for fixed cost, it remains fixed forever. If it is 10,000, 10,000. You can produce 10,000, 100,000 units, and the fixed cost will still remain 10,000. Variable cost, once the activity is zero, variable cost is also zero. Once the activity level increases, variable cost also increases in line with activity level. Look at semi-variable cost. You realize that the curve does not start from zero, from the origin. It starts from somewhere. It tells you that when activity was zero, there was a cost. This shows that semi-variable cost has two phases. It has a component of fixed and a component of variable. So that's typically what we can see, and you can always use a regression line to tell the component that is fixed and the component that is variable. Step fixed cost, they remain fixed to a certain point, usually when capacity is breached, after which it will rise and then remain constant for a certain level at a capacity level, rise again, and then continue that trend. So like the name sounds, it's a step. Rise to a certain level when capacity is breached, sustain it, rise again when capacity is breached, sustain it, so on and so forth. So what I just said is what has been produced in the slides. I will not go over it. Okay, so step costs, like I said, they remain constant until capacity is breached, and then they continue. So examples have been provided over there. Now, I want us to look at these questions. Which of the following best describes fixed cost? Okay, so easy. I wouldn't spend so much time here. Which of the following statements are true? Fixed cost, are they the same as indirect? Direct costs, are they the same as variable? Material and labor costs, are they examples of step fixed? Okay, clearly, examples were even given there. So take a look at these questions. And like I said, most of these multiple choice you see can surface in the final exam, so take good note of that. So like I said, you can always use the regression analysis to tell which component of the semi-variable cost is fixed and which component is variable. Remember, if you know how to find the coefficient of the line or the gradient, the slope, the shape, simply the change in the y over the change in the x-axis will tell you the component which gives us the variable per unit. Let's take an example of this. So semi-variable cost example. January, February, March, we were given the cost components of 40, 48, and 60,000 each. The output levels were 10,000, 14,000, and 20,000. Question is, what component of the 40,000, 48,000, 20,000, 60,000 is variable and which component is fixed? So use a simple regression line, find the change in the cost divided by the change in the unit or activity. So 60,000 minus 40,000 is a change in the cost, which is 20,000. The unit is 20,000 minus 10,000. Okay. Somebody will say, why are you not using the February? Why are you using the January and March? You are looking at the opening and the closing change. All right. So that's why we are ignoring the middle component. So always try to find a change using the opening and the closing to find a change. All right. It makes a lot of sense. And so you realize that we get a figure of 60 minus 40, 20, and 20 minus 10, 10. So 20 divided by 10, we get 2 pounds per unit. This becomes the variable component. That is the slope, the coefficient, the gradient, okay, of the curve. All right. So to find a variable component, take January, for example. It is 2 pounds per unit times the 10,000, which gives us 20,000 as a variable component. Subtract the 20,000 from the 40,000. And what do you get? You get 20,000 as the fixed cost. So it tells you that for January, February, March, the fixed cost is 20,000 throughout. You can do another check. Take February, 14,000 times 2. What do you get? You get 28,000. That's a variable component. Subtract 28,000 from 48,000. And what do you get? You get 20,000 as a fixed cost component. Take March, 20,000 times 2 will give you 40,000. 40,000, take the out of 60,000, and you get 20,000 as a fixed cost component, right? So you can always tell what the activity level will be for March, for April, if you know the activity level, because fixed cost is 20 throughout. Fixed cost is 20. So if you know the unit that will be produced in March, you just multiply that unit by the 2, which we found, the slope, the shape, and you get the variable cost component. So this is what we just did. So like I said, find the change on the opening and the closing, and then divide it by the change in the activity level, opening and closing. Let's take a typical example here. How do we find the fixed and the variable? 55,000 minus 35,000, what do we get? Simply, you get 20,000, right? And then take the output, 10,000 minus 5,000, you get 5,000. So divide the change in the cost by the change in the unit. So 20,000 divided by 5,000, you get 4, right? So you get 4. That's the variable cost per unit. Now you can just check what is the fixed cost component. 4 per unit for April times 5,000 is 20,000. So 20,000 out of 35,000, you get 15,000. That becomes a fixed cost. Let's cross-check to be sure our answer is correct. 4 pounds per unit, multiplied by the June component, and let's see, 4 times 10,000 units will give us 40,000. That's a variable cost component. Subtract it from the June figure of 55,000. What do you get? You get 15,000. That's a fixed cost component. And so if you do the same for May, you realize that fixed cost will give us 15,000, and the remaining is a variable cost. So we are asked to find the activity level. Given the activity level of 12,000, what will be the semi-variable and the fixed cost? Fixed is 15. So it's just 4,000 times 12,000, and then you get that to be the variable cost component. Okay, so that's what we have illustrated here. Fixed cost is 15. If activity level is 12,000, multiply 12,000 by 4, you get 48,000. Add it to the 15,000 fixed cost, and you get 63,000 as the total cost. So semi-variable cost, more or less, we can say it's like the total cost of a product. Okay. So you should be able to understand from this the general structure of the model you are going to go through, the role of management accounting, how different it is from financial accounting, and the importance of accounting information to all stakeholders, how we can clearly demonstrate cost classifications using different ways, production, direct, indirect, period cost, okay, and also be able to construct and interpret graphs that help us to show the various cost behaviors. And it's so easy. From the 2 illustrations you've seen, I wish we were face-to-face so you could do the calculation, but I'm sure with this, you can easily calculate a fixed and variable cost element from a semi-variable cost data. Thank you. So finally, like I said, almost at the end of every lecture, you have about 10 different cost terms or key concepts with their definition that will help you to better understand and apply the techniques at hand. Great. Thank you.